over IRS Form 8801, credit for prior year minimum tax for individuals, estates, and trusts. The purpose of this tax form is to determine if there's any credit that you may be able to apply to this year's tax situation based on alternative minimum tax liability you may have paid in the past. And then from there, you'll determine what you can deduct from this year's tax and what needs to be carried forward into future tax years. So you should complete this form if you are an individual, estate, or a trust that had an AMT liability and adjustments or preferences other than exclusion items. If you had a tax credit carry forward to the current year, which you would find on line 26 of your previous year's 8801, right here, the credit carry forward. So if you had this in your prior year tax return on Form 8801, or if you had an unallowed qualified electric vehicle credit, which you would enter in line 20. So if you had one that wasn't allowed in the previous year and you're carrying it forward to the current year, then you would complete this tax form. And again, you're basically trying to calculate how much tax credit you can apply to lower your tax bill based on previous year outcomes. So there are going to be a lot of references to off-screen forms. For example, IRS Form 6251 is the tax form you would have used to calculate alternative minimum tax liability. So when you see some of these numbers, just know that these are kind of placeholders, but you would have to go off screen or off to a different form, which I won't be able to do in this video. So I'll walk through in each line where you would get that information from as you complete your tax return. And unfortunately, we're going to focus this video on individuals. There are special instructions for estates and trusts. I'll kind of lightly go over what I can to keep the length of this video down to a manageable degree. So before we begin, I wanted to say that this is the second cut on this. Specifically, one of our viewers noticed an error in a calculation in a previous video. So instead of trying to edit that video, I decided to just redo this video. If you're re-watching this, I'm trying to use the same numbers, and then I'll point out kind of where my calculation went awry and how the numbers are different. So there are three parts to this tax form. There's part one where you're calculating your net minimum tax on any exclusion items. You're calculating your minimum tax credit for the current year, what you can deduct on Schedule 3 or Schedule G for 1041 filers, and then what you would carry forward to a future tax year. And then in Part 3, this is a tax computation using maximum capital gains rates. Not everyone needs to complete this form. You would only need to do this if either line 11 required you to go through this to put in a number, or if you had foreign earned income that the tax worksheet in the form instructions directed you to complete Part 3. In this hypothetical situation, we don't end up needing Part 3. I'll point that out, and then we're going to walk through Part 3 as if you had been required to do it. So let's start at the top with Part 1. So in line 1, you'll combine lines 1 and 2E from your Form 6251. And so this is your AMT liability from your previous year. Estates and trusts, they do have specific instructions that you should refer to the form instructions on the IRS website for. There's a lot of detail in those instructions that might take away from individual taxpayers that are trying to complete this for Form 1040. So In line 2, you would enter any adjustments or preferences that were treated as exclusion items. So exclusion items are only the following AMT items. So certain itemized deductions to include any investment interest expense that you reported on Schedule E. If you had certain tax exempt interest, depletion, Section 1202 exclusion, the standard deduction, and then any other adjustments that were related to exclusion items. So if you did not file a Schedule A in your prior year tax return, you would include your standard deduction in this. So there are specific items that you would need to make sure you're aware of when it comes to identifying exclusion items, specifically when it comes to your prior year AMT liability. So make sure that you're aware of what exclusion items are, and if you need a list, you can refer to our article or the form instructions. So in here, I just put in a placeholder of $5,000. Obviously, this would not be a situation where our John Doe, our married filing jointly taxpayer, he must have filed or he must have filed Schedule A, since we didn't include his standard deduction in this as an exclusion item. In line 3, you're going to enter your minimum tax credit net operating loss deduction. This is the total of your minimum tax credit, net operating loss, and carryovers and carrybacks to the previous tax year. So there are specific instructions on how to calculate this. The acronym is pretty ugly. It's MTCNOL. So for this purpose, we entered $2,000 just as a placeholder. In line 4, you would combine lines 1, 2, and 3. So we did that. We come up with $13,000. If you entered a 0 or less, or if you had a negative number, then you would enter 0 here. You would enter 0 on line 15, and then you would go directly to part 2. So we had a number more than 0, but it was less than $752,800, and we're not filing separately. So if that applies to you, you would have to include an additional amount. The instructions state if line 4 is $982,000 or more and you're married filing separately, then you would need to include an extra $53,000, $57,300. If it's not more than that, then you would simply add 25% of the excess above $752,800. We don't have to worry about that, so we'll go to line 5. As I mentioned, John Doe is married filing jointly, so we entered $114,600, and then in line 6 we entered $1,047,200. So in my previous iteration, I accidentally subtracted line 4 from line 6 and came up with a completely different result than anticipated. So this is where the rest of the video will change compared to the first version. So we end up having 0, which means that if line 7 is 0 or less, you would enter 0 here, 0 obviously on line 3 since you're multiplying 0 by 25%, and then you would go to line 9. So if it's not 0 or less, then obviously in line 8 you'll multiply that number by 25%. So in line 9 we're going to subtract our line 8 number, which is 0, from line 5, and we bring down $114,600. And then in line 10 we're going to subtract line 9 from line 4. So this ends up being a negative number. We do enter 0 here, and then we enter 0 on line 15. Now, if this was not 0, we would at least have to pay attention to what line 11 is. Because we were able to skip line 11, we don't need to go through part 3, but just imagine for a second that we do. If line 11 instructions told us that we needed to go to part D because we had capital gains distributions right here, you would have to complete part 3, enter the line 55 amount here. Now, if you filed IRS form 2555 because you're claiming foreign earned income, an exclusion, then you would need to use the foreign earned income tax worksheet located in the form instructions to do the same calculation, slightly different, that you would do here. So you're not doing both, you're doing either or. So in part 3, we'll go through this at a later time, but you would end up going through this entire calculation, and then on page 4, you would take this bottom number, in this case it's $2,050, and we would run it back up here, and we would enter that number into line 11, and then we would proceed accordingly to come to our line $15 amount. As I mentioned, we don't have to do that, so we won't in this situation. But whatever the number is for line 11, you would enter in line 12 foreign tax credit on exclusion items. So you would need to kind of make sure you're going through the steps in the instructions, which are kind of hard to visualize. But first, if you claimed a foreign tax credit without filing IRS form 1116, then your minimum foreign tax credit on exclusion items is the same as your foreign tax credit from Schedule 3 of your prior year. So you would enter that amount on line 12. Otherwise, your tax credit, your minimum tax foreign tax credit right here is the 2021 AMT foreign tax credit recalculated using only exclusion items, which basically there are 3 steps in the form instructions that you would need to follow to back those particulars out and then recalculate your tax credit based on those exclusion items. So again, there's a lot of off-page content here, and then you'll eventually come up with a number that you put into line 12. And then you subtract that. So let's imagine in a hypothetical situation that you've got $5,000 that you calculated offline here, and you've got $2,000 that you calculated offline for line 12. In line 13, you would simply subtract that from here. You would enter your amount from line 10 of your prior year form 6251. You would enter that into line 14. And then you would subtract line 14 from line 13. So let's imagine that amount was $1,000. You're going to basically subtract that. This is your net minimum tax on your exclusion items. So in this situation, we don't have to worry about any of that. So if you're with me, we had to calculate the tax credit that we would have had on exclusion items. We have to back those out so that we can back out the tax credit and apply the tentative minimum tax. Then we have to compare that to what you actually paid, and then you subtract that out, and the remaining amount is what you still owe on a minimum tax, which you may be able to back out in part 2 eventually. So because what you would do is you would take any carry forwards on your minimum tax, and we'll actually walk through that in part 2 right now. So in part 2, we're going to now combine our carry forwards plus any actual minimum tax that we calculated in line 15 or in part 1. and then we're going to apply that and determine any tax credit that we have for the current year and a carry forward to next year. So in line 16, we're entering again a hypothetical, the line 11 amount from our AMT form from last year. In this case, I put in $15,000. In line 17, we're carrying down the line 15 amount. So if we go back to what we had calculated, let's say that amount was $2,000, you would be putting that $2,000 here, and then you would subtract it. So now you're talking about the remainder of this amount is a credit. Now, if you had a $20,000 minimum tax and you had to subtract this, now you're not entering this amount as a zero, you're entering it as a negative amount because now you're going to apply this to other tax credits that you're accumulating, right? So whether it's the qualified electric vehicle credit that you carry forward, you're going to be calculating other credits. I was remiss in not adequately explaining certain items from IRS Form 6251. So I'm going to take a pause here. Let me reset these numbers the way they were so that so as a placeholder, we're currently on line 18, but I'm going to go back for a moment and I'm going to revisit some of these line items just so that you can capture them, put them into notes and whatnot. So lines 1 and 2E on your form 6251, this is your AMT form. So line 1 is the amount that you put in from line 15 of your form 1040. And so what your line 15 is the actual taxable income line. So instead of flashing to all these different forms, I would say line 1 is your taxable income. You're going to bring it in from your AMT form, but that's actually the taxable income on line 15 of your form 1040. And then line 2E is the net operating loss deduction that you calculate on Schedule 1, or that you pull from Schedule 1, you put it on the AMT form, and then that's also what you combine to put into this line 1 right here. Let's see, I think there was another reference to Form 6251. Here we go. Line 10, this amount is your line 16 number from your Form 1040. So your line 16 number happens to be your actual tax that was calculated on Form 1040. And then on line, I think we had line 11, this is your actual AMT. Again, from the bottom of part 2 on Form 6251, this is your AMT tax liability from the prior year. So I think we're all caught up with different lines. Oh, there's one more. Line 6251, line 9 would be your tentative minimum tax. So so now that we're here, we basically took our AMT, we subtracted any of this minimum tax on the exclusion items. We subtracted that and we've got $15,000, and now we're going to apply credits to that. So the credit carry forward from line 8801 from last year's 8801, again, we put in a $5,000 placeholder. This is going to be whatever is on line 26. So, and then we also entered an unallowed qualified electric vehicle credit. Again, the electric vehicle credit is a tax credit that is not refundable. So you can't use it to produce a refund. Instead, you have to carry it forward. And so in line 21, we're going to combine those three line items. We come up with $22,000. And then in line 22, we enter John Doe's regular income tax liability for the year, minus any allowable credits. So when it comes to those allowable credits, we're basically deferring to form instructions where you're going to add the line 16 amount from your 1040 and then schedule 2, the line 2, schedule 2. So basically you're taking your income tax bill, which is line 16 of your 1040, and then you're going to any additional tax from schedule 2, and then you're going to subtract the total of credits from line 19 on your form 1040 and then lines 1 through 6Z on schedule 3. There are a couple of exceptions. You won't include the credit for prior year minimum tax from line 6B, and you won't claim any credit from on form 8912, which is the credit to holders of tax credit bonds on line 6K. So now we've got the regular income tax liability here. We're going to enter the line 9 amount from your form 6251, and let's just say that's $10,000. We're going to subtract that amount from line 22, and we've got $2,000 remaining. So that for the minimum tax credit, we're going to take the smaller of either line 21 or 24. So since there's still a $2,000 tax bill, basically, we're going to use that credit to wipe that out. And then we've got a remaining $20,000 that will be carried forward to the next tax year. So if you do have a carry forward, make sure you keep track of it. Keep it for next year reference, because you'll be putting it into, where is it, line 19, right? So part 3, we didn't have to compute our minimum tax using the maximum capital gains rates, but if we did, then we would be completing quite a few offline tax worksheets from Schedule D. So there's the qualified dividends and capital gains tax worksheet. There's the Schedule D tax worksheet, and then there's the there's Part 5 of Schedule D itself for estates and trusts. So you're going to need to complete one of those, depending, whichever one applies to you. So if the qualified dividends and capital gain tax worksheet is the one that you need to use, you need to complete at least lines 2 through 4 of that worksheet. For the Schedule D tax worksheet, you need to complete lines 2 through 13 of that. And then for the qualified dividends tax worksheet in Form 1041, you need to complete lines 2 through 4. Or you need to at least have lines 22 through 26 of your prior year Schedule D. So these are all the prior year forms. You should have completed those. You're just going to need to pull those out for reference. So let's start with the amount from your current year form 8801 line 10. So if I scroll back up, line 10 actually is 0 here. So I think in a prior example, we had used $13,000 as a placeholder because of my erroneous calculation. So let's run with that number, since we need to have some starting point. Obviously, If we had 0 up here, we're not completing the form. So the form can't start with 0. We're going to start with $13,000. Whichever worksheet you completed, you're going to input the number at the end of that form. So hypothetically, let's just say we had the qualified dividends and capital gain tax worksheet. We would put the line 4 number in here in line 28. Then hypothetically, you're going to pull the line 19 number from Schedule D on your Form 1040, or if you're filing 1041, you would use the number from line 18B, column 2. You're going to add these two lines, lines 28 and 29, and then you're going to add the smaller of either that result, which in this case is $11,000, or the result from line 10 of your 2021 Schedule D tax worksheet. So in this case, I put in $8,000. So we'll enter the smaller of either line 27 or line 30, which is still $8,000, and then we're going to subtract line 31 from line 27. So we come up with $5,000. This right here is what we're going to use to calculate this right here in line 33. So if this number is less than $199,900, or 1/2 of that amount for married filing separately taxpayers, then multiply this amount by 26%. If it's more, then you would multiply it by 28% and then back out either $3,998 or $1,999 if filing separately. So in this case, 26% of $5,000 equals $1,300. In line 34, we're simply entering the number that we're prompted to based on our taxpayer status. So we have $80,800. We're going to enter the amount from line 5 of the prior year capital gain or dividends capital gain tax worksheet, or line 14. These are different numbers than up here. This is the next number down. So I just plugged in $5,000, and then we will go from there. So in line 36, we're going to subtract the $5,000 from the number that we entered in line 34. This gives us $75,800. We will take the smaller of either line 27 or 28, which in this case is the $5,000 from line 28. We will enter the smaller of line 36 or 37, which in this case is still $5,000. In line 39, we'll subtract 38 from line 37, and we end up with 0. We'll enter the appropriate number based on what we're prompted on the left-hand side, which for John Doe, who is married, filing jointly, is $501,600. In line 41, we'll carry down the line 36 amount. And now in line 42, we're going to enter the amount from line 5 of the qualified dividends and capital gains tax worksheet, or the amount from line 21 of your Schedule D tax worksheet from the prior year. So if you didn't complete either worksheet, then I will tell you what the form instructions say to do. So you would enter the amount from your line 1040, line 15. If that number is 0 or less, you would enter 0. If you didn't complete either worksheet, but you filed IRS Form 2555, which is the foreign earned income exclusion, you would enter the line 3 amount of the worksheet in the Form 1040 instructions. So once we complete that, now we go down, and the rest of this is fairly straightforward, at least uh, computation wise. So we're going to add lines 41 and 42, which in this case give us 80,800, and then we're going to subtract that amount from the relatively big number in line 40. We have 420,800. In line 45, we'll enter the smaller of either line 39 or 44, which obviously is 0 up here in line 39. We'll multiply the 0 by 15%, that gives us 0, and then we'll add that to the $5,000 figure that we have in line 38. So at this point we have $5,000. If line 47 and 27 are the same, we can skip all of this and go to line 23. However, in this case, I believe line 27 is like $13,000. So we have to keep chugging along. And what we do is we will subtract line 47 from line 37, which is $5,000. So that gives us 0. We'll multiply the 0 by 20%, which still gives us 0. Now, in this step, if line 29 is 0 or blank, we can skip more lines. But unfortunately, it's not blank. So we've got a figure in there. So we've got to work through lines 50 and 50 through 52. In line 50, we will add lines 32, 47, and 48. So that would be 0, $5,000, and $5,000. So that gives us $10,000. We are going to subtract line 50 from line 27, which I mentioned was $13,000. So that number should give us $3,000. We'll multiply that $3,000 by 25%, which is $750. And then we're going to add lines 33, 46, 49, and 52. So we've got line 52 with $750, line 49 with 0, line 46 with 0, and then line 33, I believe, has $1,300. So we're really adding $1,300 and $750 to arrive at $2,050. So if line 27 is $199,900 or less, or half of that amount if you're married filing separately, then you would multiply your line 27 number by 26%. So in this case, line 27 is $13,000. So 26% of that is $3,380. If that number is higher than $199,900, then you multiply the line 27 figure by 28%, and then you'll back out $3,998 or $1,999 if you're married filing jointly. So, or filing separately. My apologies. So, in this case, we don't need to do any of that. We're simply taking the 26% and we come up with 3380. Now we're going to take the smaller of either line 53 or 54. We're going to put it in line 55, and then this is also the number that we put into line 11. So all the way back here, this is the number that we would put in here, and then we would just keep going to arrive at our number for line 15. So there was one more caveat. If you filed IRS Form 2555 for the prior year, don't enter that amount on line 11. Instead, you would put it into the line 4 of the Foreign Earned Income Tax Worksheet in the instructions for line 11. So in the form instructions, there's a nice lengthy Foreign Earned Income Tax Worksheet where you go through that, and then you'll take that worksheet result, enter that into line 11 instead. So that's all we have for this video. So there's a lot of off-screen information that you have to have access to. I would suggest before starting this form that you have access to your prior year. And to be honest, this might be a form where you go ahead and check with your tax professional to make sure that you didn't miss anything, because the computations are correct. The biggest concern would be really properly identifying exclusion items and knowing what the the figures are that you need to have to do the calculations. So the calculations aren't that hard. That's what tax writing software or tax preparation software is for. It's really just identifying, based on your tax situation, which items need to be incorporated into a certain calculation and which do not. The form instructions do go into a lot of accurate detail, more so than in this video, and so does our article. If you do want to have more, I guess, insight or a detailed breakdown, you can check out our article, which you would find on teachmepersonalfinance.com. That's our website. Simply go to that and you can type in IRS Form 8801 in the search bar. You can simply, for any of the tax articles that were mentioned here, you can type in that tax form number and check out our article on each. So if you like our videos, please subscribe to our YouTube channel. And if you like our articles, please subscribe to our newsletter. We'll put links to the articles and different videos in the show notes. But if you have any questions or comments or observations, please point them out to me. Everything is greatly appreciated. And I hope, like I said, if you have any questions, please let me know. And I hope you have a great day. Thank you very much.